Hello everyone! How's it going? Anyways, I'm here today to discuss with you guys something very cool. And it's one of my investment companies. They just released their reports today. And I'm just here to react to it and give my opinions and thoughts. And honestly, if investing isn't interesting to you, hopefully I am interesting to you in a way. You know, I hope you're able to learn something in this video, have some fun in a way, right? And hopefully you may be able to try out this product. It's called the Very Good Butchers in a way. Okay, and what they make is a lot of individual items, plant-based food items right here. Okay, they are very good at what they do. And I've tried out some of their products, like this one called the Very Good Burger, and you can find it at different locations at your not superstore, IGA, Whole Foods, and these are only in Canada, okay? Just saying. These are only in Canada. And they taste not too bad, honestly. Sometimes people hate the taste of it because it tastes like really fake meat and it doesn't taste that good at all, but honestly for me, I like it. I like it, and that's what's pretty important. If a lot of people like it, that's all that matters, right? Look at the reviews. 283 reviews. And look at that, 4.5 stars. 4.5 stars is pretty high. Other than that, there's also their ribs. This is their new product, I think. And also the Very Good Steak. So yeah, these are all found in Whole Foods. Right? If you don't know what's Whole Foods, this is in Canada. Oh, actually, no, sorry. This is actually originally from US. So if you live in America, you could find it there. IGA is also in Canada as well. And hopefully later on it becomes available in Costco as well. Okay? Yeah. So the reason why I want to talk about this today is that they just released their quarterly reports 2020 full year, and I'm just here to give my opinions and thoughts on it. And when I first started investing in this company, it doesn't show here on the chart, but that's because they just recently switched their name. But when I first started investing, it was around October time. And at that time it was about $1.75 and all. And I thought to myself, this company has a good customer fan base, has interesting products that are actually healthy. They have trouble keeping up with demand. And those three factors is what really pushed me to start investing in this company. I took the big step and I gave it a shot. And that's exactly what I did. I invested money into it. I would say a pretty decent amount of money. Ordinary people say that they won't be able to, but I feel really fortunate. Put the money in, and I thought to myself at that time, the leader in the plant-based food is, as you all know, Beyond Meat, right? Beyond Meat. I told myself, this company is not going to become bigger than Beyond Meat, but it doesn't have to be. It can just become a small size of Beyond Meat. And you know what? If they're able to grow 10 times itself, I think they already have accomplished what I feel is the dream for them. And exactly, that's what they're going towards. Every step that they're making is a great step forward to becoming that. And ever since then, I've been keeping the shares, not sold out on any of it. And I'm not gonna sell out anytime soon. Give me a few years. I wanna see where this plant-based company is going to be, where this beast is going to be in the next few years. Anyways, let's get to the quarterly report, shall we? The Very Good Food Company unveils new corporate brand, website amongst major North American growth. As you see, they changed their logo as well, and their website. They redesigned their website, and that's very, very awesome. It looks very refreshing and very, very professional as well. This is the new American growth that they're going for. Let's take a look at the revenue. 2020 revenue increased. Wow. 364% to $4.6 million compared to 2019. What company could say that now during these reports? We're gonna increase our revenue 364%. Unless you're into cryptocurrency. If you're into cryptocurrency, you have a shot. In food? Pretty low chance, unless you're a great one. And this company is great, in my eyes. Adjusted gross profits increased to 32% compared to 16%. Good. Very good. That means you're able to, lower your costs, and every product that you sell or make, you're actually getting more money back. About double. Significant increase in production capacity, e-commerce sales, distribution partnerships drive continued operational and financial growth. So those are the big factors of what you want in a growth company. You want bigger production, you want e-commerce sales, you want a lot more partnerships for distribution, and that's how you're going to grow as a company. Let's see what Mitchell Scott has to say. And Mitchell Scott is the CEO alongside with his partner, Davison, right? Jamie Davison, that's right. Who's a chef. And you know what? I'm going to get his name right, because I totally forgot, and I feel so bad. James Davison, that's right. Okay, from CEO. Our financial results in 2020 demonstrate the success we've achieved in implementing a vertically integrated business model to build our very good food house of brands into an extensive and innovative plant-based product portfolio. Okay, what that shows me is that they're able to control the production and continue building this innovative, innovative plant-based food company. That's what it is. They're gonna be a big monster in this world that's gonna create a lot of healthy impacts amongst people's lifestyle. Our growth is guided by our simple mission, which is lofty, badass, but also beautifully simple. They're very direct. Simple, it's badass, and it's just beautiful. It just helps the world. Get millions to rethink their food choices while helping them do a world of good. And we are doing this by offering plant-based food options so delicious and nutritious. We're helping this kind of diet become the next norm. And the next 5 years, it's going to be more than a trend. It's going to be something that stays within consumers for a long, long time. We're pleased to report that the success of our e-commerce demonstrated an 825% increase in online orders and continued demand from our retail distribution partners, with an increase in retail distribution points from 100 locations to 1,300. We have started to build the foundation to become a key player in North America's plant-based food industry as our purpose-driven business resonates with consumers. That's a big explosion in e-commerce business, huh? 825%, obviously helped a lot by the coronavirus, but is this something sustainable? No, it's not, but it is a great step in their business. And if they're able to even, do even half of that in the next few years, that's just incredible. Okay, this virus has just accelerated these types of businesses and increasing their retail distribution points, so where you can buy these types of products, from 100 places to 1,300 places. That's almost at 10 times. Sorry, more than 10 times. As we continue to see increased market demand for our unique product portfolio, now consisting of 14 plus plant-based products. Okay, they have 14 already, right? And you can check it out right here, or you can try some of it. You might like it, you may not, right? Yeah, look at all these different types of products that they have. We are pleased to report that we are in a well positioned to reach a new level of growth for this company. Okay, we're on pace with our new production facility in Vancouver, providing us with a substantial growth opportunity to increase production capacity by 2,690%. I'm just laughing when I say that. With 37 million pounds of annual product in 2021. As we continue to build our, you can say our footprint across North America, entering into new relationships with groceries through distribution partners, and opening our e-commerce website to higher new growth markets, we look forward to unlocking the true value of our facilities in the year ahead. I think that's just incredible what this company is doing. And to increase production that much is a big step for them, but it's also a big challenge for them, because being able to produce that much, you might have some supply problems as well, and you also have to be able to keep up with demand, right? Is customers going, and you also have to make customers continually want your product. You have to continuously innovate your product in order to reach these levels. Okay, that's going to be a big challenge for them. But in my opinion, I believe they have the resources, the power, the intelligence to complete it. Let's move on. And meanwhile, let me just quickly send a message to all. Anyways, just sending a message for others. Maybe if I go live on Instagram and YouTube? How's that work? Does it work like this? Maybe. Who knows? Okay, anyways, let's just go back. Anyways, if you are in the chat, let me know who you are so I can say hi to you, talk with you. And besides talking about finances, let's talk more about life as well, right? I'm not just all about finances. Yeah, let's look around. Looking at their finance summary, e-commerce, $1.4 million compared to the past quarter, which is almost $1 million, so that's a great increase. If you look at the year, full year, $3.3 million compared to 2019. It's kind of a big joke. Well, it's because this company has expanded so much, right? Last year, they made so much significant progress. And plus, you got your coronavirus acceleration. Almost 12 times. Yeah. 10 times or 12 times its effect. Okay, wholesale. 255,000 compared to 310,000 last quarter. Full year, 840,000. Not too bad. What worries me is this wholesale number. That's one thing I would have to point out. A decline like this, it worries me a little bit at the moment because I want to see what's it like in this quarter, this upcoming quarter. You know, you kind of expect more people to be going out there to buying more food, you know, cooking at home and all. So this decrease kind of a little bit worries me, but it kind of offsets because look at the business right here, e-commerce. See, so the pattern you might be thinking is that instead of people actually going to the stores to buy their food, they just order and get it delivered. That could be what it is. That's why it shows its decrease. And I'd like to see how management responds to that question next tomorrow when they have the conference call. Butcher shop, restaurant, and mainly butcher shop in the restaurant business. Nice, 142,000 compared to 84,000. They opened up their store. It's doing well. Full year, 413,000. So obviously they have three main ways of getting revenue, right? Obviously the biggest one right now is e-commerce, right? Second biggest, wholesale from the stores. Third one, butcher shops and restaurants having their food product, making a total of $4.6 million. Now, I did my own numbers, forecasts. I actually forecasted them to have a $2 million revenue. And that's because they announced they had really crazy November sales. Like the monthly record or something. So I was very, very bullish on that. They missed my estimates, but not that close. Not that far away, okay? It's about, you can say 5 to 10%, okay? Maybe I'm just way too optimistic about the numbers. I also had the gross profit about 800,000. I thought they were able to make a little bit more because they're able to, you know, produce at a much easier rate and as well understanding the costs. But no, it seems like 260,000. And you know what? That's actually less than their last quarter. But the thing is, this company is in such huge revenue mode. Sometimes as an investor, I can forgive that for now. In the future, in about a year or two, I love to see it much higher. That's what it is. That's the narrative. Because you look at gross profits. The last quarter, 14% only. It dropped from 21%. The average is about 18%. And that's fine. That's fine for me for now. Later on, it has to be higher, for sure. Because as you naturally get better at producing the stuff, you should be able to earn more, back more. And this is a huge amount of net loss, $5.8 million. Okay. Compared to last quarter, which is 4.5 almost. Whole year is about $13.8 million. But that can be forgiven because you have this much amount of insane revenue. If you don't, I will be super, super worried. I can look past this for now. You know, if this continue year, they have huge revenue as well, expansion, that's fine with me. You can still be unprofitable. That's okay. Next year, I'm gonna judge you much more on profitability. That's what it is. I have stricter demand expectations for you. This is fine for now. But what? I mean, see, that's why I explained the good and bad, right? I don't always look at the good, right? You always have to look at the bad as well. What are some things that they can improve on, right? Especially gross profit. You look at your net loss. Yes, I think on the conference call, they're gonna talk about why they lost so much. And that's really because of their expansion of the facilities, their partnerships and all. So you look at it. The entire year, 2020, that's how much they've produced in e-commerce. And that's about 105,000 in e-commerce last quarter. 44,000 in the stores, right? Wholesale. Number of e-commerce orders. They have about 13,580, which is on par with the third quarter. It's a little bit increasing, not too bad. Year end, 40,000. Awesome. Good. Now expectations for this year. Now, once I'm done with this report, I'm going to take expectations and put it into my numbers and see what's it like. But you look at it. Year end. How much have they produced in year end of 2020? $319,000 plus 169. What is that? 470,000 units? Not too bad, huh? Production capacity. They make about 20,000 pounds. Okay, and that's an increase of 12,000 compared to 2019. And then you look at the number of products that they've manufactured. 14. 13 last year, 2019. So this is one more. They added one more product, not too bad. But the production capacity is going to be even more huge this year. So that's why this year is huge as well. And you look at their number of wholesale distribution points, which is basically the stores, right? 1,300 to 100 stores across all provinces and expansion into America. Thanks to that. These ones you can probably read on your own because it's going to take me a long time to explain them and you'd probably get really bored. I'll explain some of it. For example, like this one, wholesale distribution agreement with United Natural Foods, largest publicly traded distributor in North America, to distribute this company's lineup of products across Canada. This new partnership will help its retail expansion, and that results in 1,300 stores compared to 100. That's very impressive, huh? You know, I can go on and on and on about this, but there's just so much great things to say about this company, more than the bad things, that I am very proud to be investing in this company, and I thank myself for doing that. Launched 8 new very good food products into the market, including the very good pepperoni, very good dog, which are becoming fan favorites. You know what? And that's what I talked about. When you have a loyal customer base, you are going to be successful. As long as you continue to innovate, you will be successful. That's what I believe. And look, establish hubs across North America for e-commerce and wholesale sales. To 50 states in America, 10 provinces, and 3 territories in Canada. They want to target the entire North America. That's what it is, and that's what these next 2 years are going to be huge on. And look at that. Strategically building up the leadership team. In order to have great results, you need great leaders. Adding key roles to support the increased operation and plan strategic growth in 2021, including Kamini Hikari, who was appointed Chief Financial Officer in late Q3, and Anna Silva, who is the president since this year. I can go on and on and on about this, but I would have to say overall, it's been a really impressive report. I would have to give it, if I'm a strict teacher, B+. B+. If they were able to lower their net income and also increase the gross profit much better, I would give them an A. So obviously this is not a perfect report, but it is a damn great one. Okay, and every quarter they just give out great results. Okay, and that's what I'm gonna expect from this company for the next few years. And I feel so proud of investing in it. And if you haven't invested in it, now's your chance. Okay, if you don't know about this company, now's your chance to know about it because of me, right? And so today the stock increased about 1%. Tomorrow, maybe the stock will go up because of great results, but that doesn't always happen, right? That's what the stock market is about. I would say, is it still an opportunity to buy? Definitely it is. And if I were to help you calculate its ratio, so its price to earnings ratio and its price to sales ratio, which you should know if you are an experienced investor. If you don't know, price to earnings ratio is basically how much money you're willing to pay for the company if they earn $1 in profit. Okay, so you take their current market cap, 390 million. Okay, oh my gosh. Okay, 390 million. What's wrong, Mike? 390 million. Let's divide it by how much net income they made. Alright, and they actually made no net income. So anytime net income is 0 or less, it's negative. It's terrible. Okay, it's like, I'll show you. 13 million, right? Is it 13.8? It's basically this. Every $1, no, it's funny. You basically were paying $1 for, in a normal environment. If this is a positive number, that means every $1 profit the company is earning, you are willing to pay $28 for this price. But since it's negative, it means for no profits, you're actually paying them $28. Okay? For every $28 obviously every loss of $28, you're actually paying them. Okay? That's what it is. No, sorry. You're paying $28 for every $1 loss that they have. Okay? Make it clear. Every $1 loss that they are having, you pay $28. But that's fine. You know why? Because their price to sales ratio is basically how much revenue they're getting. Okay? And you take their current market cap again, which is about 390 million, right? divided by their full year revenue, which is 4.6 million. Meanwhile, my computer is really broken. And you get a price to sales ratio of 84. That means $1 revenue that they are paying, every $1 revenue that they're earning, you're paying $84. What the? That means this company overvalued and all? No. And yes, if you compare it to other competitors, but you can't say it because they're all in different situations. This is an expansion company. Alright? If this wasn't an expansion company and it was already an established company and you're paying this, you're getting ripped off, okay? But what I'm paying for is a super expanding company. That's what it is. This kid is gonna grow super tall, grow super smart, super handsome, whatever it is, great value to the world. And I can dare say this is worth it. At this price you're paying, still now. When I bought it back then, okay? Whew. Let me tell you, when I bought it back then, this is a $1.75, right? And you look at its revenue, right? Come on. That means I was paying 53 cents for every one revenue that they were making. What? I was literally stealing the company at that time. Maybe I should have put all my money in there. Just kidding. Always diversify, okay? Anyways, I'm glad you all enjoyed this video. It might have been a boring one to you, but I hope you all learned something great from this. And I hope you're all able to try out their products at least, right? And now that you know more about the products, give it a shot, give me some reviews, and I hope you all enjoyed this, okay? Thank you very much for all watching. It's been a long night and